Good afternoon, traders. It is E, and it is Friday, the 6th of February, with an end of day review. Sometimes we can have too much information on a chart, sometimes not enough. This is an example, in my opinion, of not enough information. We can still see from this chart the 58.75 had held overnight. Also the 52 to 51, which we thought were supportive. And we had a slim jim, a tight range overnight waiting for non-farm payroll. 30-minute chart was still in play. We were above the pink line, we were above the blue line, the green, the red line, so bias was still up. And we had selected a couple of targets that had jumped out at us, the 65 to 67.75 targets. Pre-market, we had suggested be conservative, look for the 62 to 65 range, use that 68 area as a stop, and expect that the market might halt there and come back and do some backing and filling. Our plan was to fade any highs, the new highs, and then look to buy the pullbacks. Normally first pullbacks are buyable, and we thought that we could buy the first pullback. So using the 68 area as resistance, first trade call was to react. If you were not in the trade, and we don't advise traders to get into the trade ahead of news, then to play the fade and then look for buying the pullbacks. Using the middle from 57 to 59 as support, try to buy the pullback and not expect to take out the high. Because of the length of the move for the entire week, our game plan was to be done by 11 to 11:15, no later than 11:30, assuming that traders would want to capture some profits from this long run. We call this Get Her Done Friday, and meaning get the majority of your trade done in the morning and assume that only the professionals who want to trade the afternoon in terms of position squaring would be the ones making the market move, not just the locals. We had rising moving averages at the open. We were above the blue line. We thought the bias would be to buy pullbacks. If you are fading the open, look to be done into that 57 to 59 area and expect a potential push to try to get to those targets that we'd identified, high odds targets 67.75 to 65. We thought surely we'll get to 67.75, maybe higher. The timing trade had set in. We had achieved the target that we had expected. I told the team I was happy, I was satisfied. It may go higher, but it will go without me. I'm not interested. I would rather see it pull back. Thought it was time for profit taking and position squaring afternoon. Don't expect a plunge. We'll take it step by step. You can see the slim jim that formed here, and then this bar right here is the gotcha bar. This one leaves traders stranded who wanted the 72s to 75s, and at this point the game was on. One of my primary charts is a 15-minute chart. End of day, you could see where we were hitting into that 45, 46 zone, which we thought would be supportive, using 42 stops. Anybody that wanted to buy for end of day. 90-minute chart, a little offbeat chart, but one that I looked at and helped me to decide that this trade was done and we would get a bounce into the close. I love sequence trading. I love picking out targets based on resistance. In this case, we had already achieved our target at 67.75, and on the pullback, the first thing we were thinking of was, can we get back and test the middle, the 61s, 59s? When that test happens and then we get the bounce that fails at 66 demon, then all of a sudden comes to our intuition that the next trade should be for the gap, which never closed. That gap was still open. So 66 immediately became resistance for the gap at 55. And this is what I call sequence trading. So instead of expecting a solid breakdown here, first things first, you've got to capture some profits. Double bottom we said at 52s. Think about capturing, and then the key will be the bounce. Can we bounce up and retest that 59 and a quarter, 58.75? Use 62 stops, and if you are entering in that neighborhood, hope to take out the lows and see if we can't come down and test the 52s again and perhaps sub 52. So this trade, once it gets back under the blue line, it starts to come down again in an umbrella trade. Here's the blue line I was referring to right here. Here's pushing back into it. It can't get through it, comes right back down under it, and this is the continuation for the umbrella trade. Once we get back under that 52, first thought in my mind is we're going to 48. We're going to test that 48. A function of the high. The high was 68. I'm saying a 20-point trade is coming. And I told our guys to look for 48 to 46s, and probably that 44 and a half was also part of this transaction. Rain line was at the 49 area, 49 and a quarter. Immediately, once I see under the blue line and the green and the red line, the first thing I am thinking of is this relationship between the rain line and the blue line. This yellow circle represents what I think is the current battle. This pink line to that blue line. Coming to the end of day, that target at 44 and a half as a potential support is this red line. And I thought it was time to close out trades on the short side and make sure you were paid end of day. I made those observations on Twitter, and basically we were looking for anyone who had made a solid trade short to take some profits, and that would cause a bleed back and a bounce back, where I suggested we could get a doji day close at 55. Here's a professional tip for you, free of charge. I confirmed that idea of that 44 as a potential support using 42 stops for a buy into the close by taking a 2-day measure. I took the low of the previous day and the high of today and put a middle target right here at 44 and a quarter, 44 and a half on the money. We believe in teamwork, hard work, self-responsibility, being professional, staying humble, tempering that with confidence. And we are ever grateful for the blessings we receive. If you'd like to find out more about how to trade like this, give us a call. Numbers are there on Market Wizard's site, or obviously email admin@eminywizard.com. Have a wonderful weekend. Thanks for listening, and we will see you next week. This is E signing off for eminywizard.com.